Hello and welcome to Invested, a podcast, or not a podcast, Invested, a show where we talk about that, right? Hi, I'm Joel Anderson and welcome to Invested, a show where we talk about all of the tips and tricks for all things involving investing. Today, we are going to talk about one of everyone's favorite investing subjects, the Oracle of Omaha, the Nebraskan Nostradamus, the clairvoyant cornhusker, Warren Buffett, the one and only. Warren Buffett is one of the richest people in the world. And he's also one of the most famous investors because most of the other people at the top of that list, they got there by founding a company that just took off. Warren Buffett is really, truly an investor who's just put his money into other people's endeavors and been really smart about it over the years. A lot of people ask themselves, what's the secret? What is that special alchemy that he does that no one else gets, okay? So I'm gonna tell you right now, Warren Buffett's secret. Lean into the computer. Come on, don't be shy. Get in real close. Are you ready? The secret is, there is no secret, okay? There's no special thing that Warren Buffett is doing per se, other than just following some very basic investing principles and really sticking to them over time. Number one, value investing. Number two, slow and steady wins the race. And number three, dividends. So what do I mean by those? Value investing is a very basic concept for investing that goes back many years. It's really simple. You just want to get the most value for your money when you buy a stock. So it involves looking at underlying companies, figuring out all the stuff they own, and then really looking for the ones where their stock price is much lower than you would otherwise think it should be. And as far as slow and steady wins the race, well, we all know the story of the tortoise and the hare, right? Start slow, and it might be a dribble at first. That might be a little bit frustrating, but you got to stick to your guns because eventually it does become Niagara Falls. And finally, the third one, and probably the most specific, is dividends. It's a real basic principle, and it's a steady return that's a lot more dependable than just the price of the stock, which tends to go up and down. How can this apply specifically to you? Well, for value investing, spend some more time thinking about not just the company that you're buying stock in, but the price that you're buying it at. Even the best company in the world isn't a great investment if you're paying too much to get the stock. Imagine Zeke's Burrito Stand offers the absolute best steak burrito in the entire world. Is that where you're always gonna go for burritos? Not if Zeke charges $100 a burrito. You know, at that point, not worth it, especially if Maria's Burrito Stand is right next door with a pretty good burrito for $5. Slow and steady wins the race. Stick to index funds and ETFs and the things that will slowly build your wealth over time, but are not going to flame out completely and then leave you with nothing. So if Zeke comes to you and says, hey, I've got all of this buku burrito money from charging $100 a pop, and I think I've got this way to triple it in a matter of months by investing in cryptocurrencies, maybe just pass on that. You know, every once in a while you might kick yourself for not getting in on a great scheme, but more likely, it's just gonna wind up in Zeke completely flaming out, losing all of his money, and you're gonna be sitting there that much prettier in 5 and 10 and 15 years when your stocks have gradually increased in value and really sort of become this nest egg that you can depend on. And when it comes to dividends, just give a stock an extra hard look when it does have a dividend. Not every dividend stock is going to be a good investment. You got to decide that yourself. But definitely that dividend, you got to keep in mind that's a steady return that you can count on, especially because you can then choose to reinvest those dividends, which creates this extra level of like exponential growth. You know, the next time the dividend comes around, you'll have more stock, so you'll get more dividend. And then the next time after that, because you have more stock, you get more dividend, which means even more stock, which means even more dividends, which means even more stock. It just builds on itself, and that can really, really bolster your portfolio. Okay, so that's Warren Buffett's big secret, you know, get good value for your money when you're investing, just like you try to do with most other things. Focus on those slow, steady returns that'll build wealth over time instead of those fast, flash in the pan investments that seem great. Stocks with dividends, give them an extra hard look and see if they're right for you, because those dividends can play a huge role in building wealth over time. And that is how you can invest just like Warren Buffett.